Hi, I'm Terrell Turner, the host of the Finance and Accounting Show. Now, today we have a great episode because this is a topic that is very, very, very important to every firm and I think just about every business. So, all of the clients that you deal with as well. And it is really being, I guess you say, open minded and thinking outside of the box about your business model. Because a lot of accountants, they are taught to be very good at the technical craft, but often they're pretty horrible about their actual business model. And one of the things that we're realizing is the way that our grandparents or the way that our parents or the way that some of those that mentored us approach the business model of our type of business, it's not the best approach and it's not going to get us the goals or the objectives that we really want. So I'm going to have a great conversation with someone that does an amazing job of really helping people rethink how do you solve the business model problem for your business. So stay tuned for today's episode. So without further ado, let me bring on my guest, Ed Kless. Welcome to the show, Ed.
Terrell, thanks so much for having me. Really appreciate it.
Absolutely, absolutely. Now, Ed, you and I, we talked a little bit before the show, and I learned a little bit about your background, but for our audience, can you tell them a little bit about your background?
Sure. I have the best job at Sage because my job is to help our business partners as well as the folks internally at Sage make their businesses better. And by business partners, I mean not only the accounting firms and bookkeeping firms that recommend our products, but also those that even resell us in the mid-market as well. And then even perhaps our customers, I have an interaction with them as well. So I don't know, you're probably too young to remember Norm getting the beer tasting job on Cheers, but there was a whole episode where and it's great because I do one job and I get like 3 times the pleasure out of it. So it's a fantastic fit for me, and I love doing what I do. I love sharing the really not only the concept of business, but business as a spiritual component, not just a physical presence, but also because business is what makes our lives better. And I love that aspect of it.
And it has to be a very, rewarding time to be in it because something that we're all living through is that, the way business models or the way that businesses are coming to market are drastically different from probably for most of us when we started studying business or we started getting exposure to business. So how has that been, for you and in seeing some of the changes happen and knowing that you're part of the process is helping people adapt to these new changes?
Well, before I get there, I want to back up a second and just give a level set and talk about the definition of a business model, because
Mhm.
I think that sometimes especially if you ask an MBA, my apologies to MBAs out there, what's a business model? You get like a 27 paragraph explanation, blah, blah, blah. I want to just distill it down to one sentence, that is, how does your organization create value for and then capture some percentage of that value from your customers? So that's the definition. So the first part, okay, how do you create value? That is certainly changing from time to time, but even more importantly, how we're capturing some percentage of that value through our price, which what we call revenue. That's what's really changing more rapidly than people understand. And the latest business model that I'm seeing a lot of people move to is, of course, subscription. So we're moving away from this concept of we sell time, especially in the accounting profession, we sell hours, right? We sell access to or transfer of our knowledge. And I think that's really the key insight. There's never no customer of any CPA firm or bookkeeping firm wanted to buy an hour. And Peter Drucker, the great management guru, said, "Sell what your customers buy." And that's like, duh. What do you think? I'm an idiot? You sell what your customers buy. But if you think about it, customers don't buy hours; they buy the results of those hours. They want an outcome from those hours. And if you're putting hours on your invoice, which is what effectively a timesheet system does, you're selling them something they don't want.
Wow.
So sell them what they want, which is the result or the outcome or the access to your brain or your collective brain if you have more than one person in your firm. So that's what they want to sell. And we can do that through creating, I think, a subscription to us rather than just, hey, we'll send you an invoice when the tax return's done.
Gotcha. Now, I'm curious, how long have you been thinking about, the business model that way? Because, I would guess if you've been thinking about it for a while, there's probably a lot of people who have probably questioned, like, well, my business doesn't operate that way, or the subscription model can't work in my environment. So, how long have you been, thinking in that direction about the business models?
Yeah, that's a really good question. Before that, and I would say it's about 3+ years or so, but I encountered a book called Subscribed by Teen So, who's the CEO of Zora, which is, in all fairness, a subscription-based software company that does subscriptions. So he's got a vested interest, but he's also an evangelist for the subscription model. He really is. And but before that, I encountered the guy that I do the radio show with, Ron Baker, and we were helping people transition from billing by the hour to what was called value-led pricing or value pricing. But we really think that the subscription is the next evolution. So I've been thinking about value pricing for probably 18 years, and for the last 3 or 4, really moving to subscription. And it's really just a furtherance of the model that we still have all the principles of value-based pricing, but then we're going to apply this different way of the capturing of the revenue. And just to help level set this as well, the old model that still so many people are under is this billable hour stuff. If you think about it, what you're doing is you're saying, okay, I first have to understand what my costs are. So I have a cost, and then I multiply that by some number, and that's the price. And then I pray and hope that the customer or client sees that value. So the syllogism is, what are my costs? I multiply that so I can get a price, and then I hope the customer sees the value. The message for the longest time is, let's flip that. No, let's first understand, what is the value to the customer? That value to the customer then is the primary, but it's not sole determinant input into your price. And then your price, and I love this phrase, justifies your expenditure of costs. So prices don't come from cost, like the accumulation of cost. Prices come from the creation of value, and then the prices then justify the cost action on the other end. And it's a completely different way of thinking of the way that things work. But people like to think that my time has inherent value. No, your time has no inherent value. The time that you save your customers has value. So if anyone should do a timesheet in this whole thing, it should be the customer. Because you're instead of them taking 60 hours to do whatever it is that they want to do from an accounting and finance perspective, you're going to say, no, you're not going to have to spend any time on that. I'm just going to give you the information that you need to get in 6 minutes. So I'm saving you 60 hours. I'm saving you 60 hours. That's your value, right? Not the 6 hours it took you to put the 6 minutes together for the customer.
That is an amazing way to look at it. And, it makes me think about, as I kind of think back over time, it's just like the first person who probably started a finance and accounting business probably thought about it from a perspective of, hey, what value am I delivering? But somehow over time, we got so locked into, my time is worth this. My time is worth this billable rate. It's like, I often wonder, like, how did we get locked into that so deeply?
Yeah, it's a big problem, and I think it goes to something. I do that presentation called the top 10 business myths, and I'll give the presentation away. I'll give the number one myth away. The number one myth away is the myth of the zero-sum game, and it really evolves from some bad economic thinking. And the best illustration of this is from the movie Wall Street, which I can't believe is 35 years old or whatever. 1987, I believe it came out. And the whole there's a scene in that, not the greed is good speech. Everybody remembers that, but there's another scene where Bud, who's played by Charlie Sheen, is interacting with Gordon Gekko, and Charlie Sheen says, "How many yachts can you water ski behind, Gordon? How much is enough?" And he says, "It's not a question of enough, pal. It's a zero-sum game. Wealth isn't created or destroyed, merely transferred from one perception to the other. And while Oliver Stone is a great director, I mean, after all, he made Kevin Costner look good in the movies, which is, but, 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 but he's a terrible economist, and he wrote the screenplay for it. But there's this thinking that we trade value for value, that the price I pay is somehow equal to what I'm supposed to get. And it's not that way at all. So when you pay $4 for your cup of coffee at Starbucks, Starbucks wants your $4 more than the cup of coffee, and you want the cup of coffee more than your $4. So there's actually a gain for you. And can't say how much that is. Do you want it for $4.50 or $5? But it's more. But notice that if wealth is not a zero-sum game, it's not value for value. It's an uneven trade on both sides of the equation. So in other words, I benefit because I'm doing this for lower cost than my price, and you benefit, Mr. and Miss Customer, because you are getting it for less than it would have taken you if you would have done it on your own. So wealth is actually created on both sides of that transaction. And it's this myth of zero-sum game, and it's zero-sum thinking that so many people get locked into. It even happens for employees. Employees think, I get paid a salary, that must be what I'm worth. No. That's not how it works at all. You're supposed to create more value for your employer than what you get paid. That's okay. That's not them exploiting you. That's the way the system works. Right. And I think that people misunderstand this, that's why we are better off than Russia, why we are better off than places in South America, not because of anything inherently different about us as human beings, but because we understand that we have this freedom to create and trade with one another, and in other words, make each other's lives better. And profit is actually made on both sides of this equation, and it's a wonderful, beautiful thing. And I don't even like using the term capitalism because it's not. It's dynamism, it's innovism, it's this creation of new. My why, my Simon Sinek why is I believe that entrepreneurs continue the work of creation. And that's what we do. That's what all of us do. We continue this way of thinking about things differently and improving the lives, not just of ourselves, but of others. The golden rule in this whole process is the good fortune of others is also one's own. When other people benefit and get better, we all get better because it makes the entirety of the system better. And I think that's the thing that we've got to change in the way people think. And even business people in business for years and years and years don't understand this. And it profoundly saddens me.
One of the things that I'm very curious about is, we are surrounded by a world that thinks zero sum. We are surrounded by a world that in some respects is what I would call sometimes, like, it seems like a little bit of an entitlement of my hour, regardless of what I do in that hour, my hour is worth this much time or this much money. And so when we're surrounded in a world like that, like, what were some of the things that you did to allow yourself not to be stuck in that mindset, to, like said, to recognize some of the things that you shared so far? Like, what started to turn the light bulb on for you?
So it's funny you asked this question. I actually have a very specific story for this. So this goes back a long, long time to when I was in practice doing implementations of accounting software. I'm not an accountant, by the way, but I've worked around the accounting profession for a long, long time. And I was this is 1994, 95, somewhere around that point. And I'm demoing our software for this prospective customer of ours. And I'm going through the demo. And back then, the demo was basically prospect training. We would keep going through features until we said, they would probably say after about 6 hours, please shut up and I'll buy from you. Please stop talking and I'll buy from you. All right. But at this point, this guy says to me, Ed, this is great, but I presumed that your accounting system could produce an accounts payable check. Call me crazy, but I thought that would be okay. Right. He says, here's what I need. I need you to show me that your system can give me a report that will show me my inventory turns by my categorized items. And I'm like, okay. And so I'm going through my mind of, do we have a report like this? And we didn't. But I was like, oh, I'll open up the report writer and create it on the fly for him and show him that we can do this. And that's exactly what I did. I created it. I think I made it red, white, and blue because it was near Independence Day, and I'm like the rockets are going off, and it's great. And we get this deal, and it was a $60,000 deal, $30,000 in software and $30,000 in billable hour consulting that we ended up taking, right? And we win it, and I'm thinking I'm a genius. I have done this great work. Well, about 6 months later, I'm at their office, and he throws his arm around me. His name is Evan. Evan throws his arm around me. He says, "Ed, remember that inventory report you gave us?" I'm like, "Evan, what are you talking about?" The inventory report that you gave us, because I had to give it to him because I did it during the demo before they were even a customer. I couldn't have even put it on my timesheet to even capture this, right? This is how stupid, right? And he's like, "Yeah, we've been able to figure out that because we have that information now, we've been able to increase our revenue this year by 40%. They were like a $10 million company on a run rate for 14 million because of their ability to get this information in a timely manner." And I thought about it for a second. I said, wait a minute. This guy is making $4 million. And what did I get? Zero. Well, all right, 60,000. But what I had was this epiphany that, wait a minute, he would have paid $100,000 for this system, knowing that he could have gotten 4 million. Now, maybe he wouldn't have come up with 4 million, but he would have come up with $1 million. He knew that if he had this information, this was going to make a major impact on his organization. And if I had stopped and asked him questions about that instead and had that conversation, I'm firmly convinced that he would have paid me $100,000 for it. I would have had $40,000 more, and he would have been happier. Right? So it was that moment that I went on this quest to try to understand this. And I came across a couple of different books. One of them is called Let's Get Real or Let's Not Play by a guy named Mahan Khalsa. It's an out-of-print book, but it really explained to me how you have what's called the value conversation. How do you talk to a prospect and get them to tell you what it's worth to them without you saying, "So what's it worth to you?"
Yeah.
Right? Because it's converse, and you're not doing this out of, I need to make it seem like I'm great. You're perfectly content with, if you have this conversation and they say it's not worth it, say, you know what, then we shouldn't do business. That's a perfectly acceptable outcome. If I can't help you make your business better, I don't want to work for you. Right? I only want to do work for people where I can actually help them. And it taught me how to have that conversation. And then once I started doing that, then I encountered another book by Ron Baker, who's my now co-host on The Soul of Enterprise, called the Professional's Guide to Value Pricing, where he explained to me that price is a function of this of this value, and not a function of my cost, and that billing by the hour is a derivation of the labor theory of value. And the labor theory of value, by the way, was put forward by a guy by the name of Karl Marx. So all you out there who are billing by the hour are practicing Marxist.
It's so many great things that you mentioned in there. And I think even for myself, and I think about what you said about, that value perspective of, it was something that I learned too with the first time that I told someone, here's what my price was. And they said that it was, it was too high. And it was one of those things that I realized, like, you know what, then that means I'm not generating enough value for you. We're not a good fit.
Right. Yeah. And that's okay. That's a perfectly acceptable outcome. It's called the winner's curse, right? There's two winners in any sales competition, right? There's the person who gets the deal, and then there's the person who is out first.
Yes.
Right.
And one of the things that I think about with that is, I wonder if, in your research and just working with so many different businesses, I wonder if some businesses struggle with understanding the value to the customer because they don't take enough time to actually understand the customer's pain.
They don't. And that's so the story that I just told about that inventory report was because I was a solutionist. I had it so in my brain that what I was supposed to do was solve their problem, that I didn't realize that solutions, and this is what I got from Khalsa's book, solutions have no value. They only derive their value from the problems that they solve. So instead of giving away the solution, what instead I have to do is I have to be better at having a conversation with the customer on understanding of what the problem is worth to them. And there's a very simple mechanism for doing that. And getting back to my inventory story, instead of creating the report for them, here's what I should have said. Evan, thanks for asking. We do reports like this all of the time. We do customizations all the time. However, what we found is that oftentimes people can get our information out of the system a lot of different ways. And it doesn't necessarily require a customization, but we can get this information differently. Would it be okay if I asked you a couple of questions as to why you think you need this information? And that's the formula almost all the time. So assuage them by saying, thanks for asking, we do this kind of thing. Mm-hmm. Then explain to them that it's more complicated than that. And then this very specific closing question, which is, would it be okay if I asked you some more questions about it? 99 out of 100 people say, sure. And now what you've done is you've pivoted off of the solution and onto asking them questions about the problem. Mm-hmm. And now I can start to say, okay, well, so what makes you think you need this information? Well, our quality of our output is diminished because we don't have this information. Really? What happens when you don't know the quality of the output? Well, we have more breakage. Oh, really? And what does that cost you? Right? So you just kind of go through this whole process where it actually uncovers the value, and they tell themselves the story about why they need you.
I think that is a brilliant thing of something I'm learning more and more, even in running my own practice of, that asking questions, because people will tell you what their pain is if you're willing to be patient and ask questions.
Yeah. Yep. Back to Peter Drucker, and this is why every business person should study Peter Drucker, because he had all of this in his stuff. But another Peter Drucker thing that he said was, replace advice with curiosity.
Wow.
Especially early on in the conversation with a new customer, or even a customer that you have that has a new problem, replace giving advice with instead being curious about them. Mm-hmm. And that changes the whole perspective.
Wow. It reminds me of the How to Win Friends and Influence People, yes. Of just the concept of just like how people will think more highly of you when you become more interested in them.
I want to know more about them. And it's not, there's no malfeasance here. I'm not doing this out of manipulation. I'm doing it out of genuine curiosity and genuinely try to understand if they need what I have, I'm more than willing to work with them. But an okay outcome is also us saying, you know what, there's not a match here. That's okay.
Yeah. And I find that, one of my hypotheses is that, asking enough questions to get to the conclusion that this person and I, like, this isn't a good match. To me, it seems like oftentimes I found that is a better outcome than just closing the deal when you've had enough bad relationships happen.
No, absolutely. Because, and to this day, and, I think this goes to what you were talking about earlier when we first started the conversation. So many financial professionals spend half their time working with people they don't really like. And that's it. I know you're laughing because it's true, but it's sad, isn't it?
Mm-hmm. Absolutely. So it's great to, like I said, to hear all the great, all the great lessons and the things that you're sharing. And, I know you create a lot of different content. You put a lot of great things out there. If people are interested in diving a bit more, because you just scratched the surface with some of the things you shared here. So if people are interested in hearing more about some of the awesome things you have going on, like, where should they look for you online?
First place is the show that I do with Ron Baker called The Soul of Enterprise. And there's a website, thesoulofenterprise.com, but you can also find us on all places podcasts. So Apple Podcasts and Stitcher and Spotify and iHeartRadio and blah, blah, blah. Just search for The Soul of Enterprise. However, if you want to take it to the next level, which is our Patreon channel, which is patreon.com/TSOE, not only do you get the episodes that we do commercial free, in other words, without commercial interruption, but you can also join our community and get our bonus episodes, and then even come on and have live conversations with Ron and I on a monthly basis. So we're more than happy to have you a part of that community. But first, listen free for a while. There's plenty of great content out there on the listen free. And then if you think that you want to participate, we're more than happy to have you come with us.
Now, can you tell us a little bit of insight on, of the picture? Now, when I typed in The Soul of Enterprise and it popped up, I didn't expect to see the saxophone and the piano. Like, what's the story on that?
Okay, so there is a story behind this, and the co-host Ron was doing a presentation down in Australia where one of the group that hired him sketched him while he was doing his presentation. And, he had come away with some of these great cartoons, which are included in our book, by the way, which is over my shoulder here. Some of those, but it was about the same time that we started the radio show. And Ron had this idea: I would love to have Andrew, was the guy's name, do the commercial for us. So Andrew has never met me in person. He only saw pictures of me and sketched out this picture of me at the piano. And of course, it was called The Soul of Enterprise. I actually do play the piano, or I bang out chords. Like, I can play Hey Jude at a party when people are drinking and people think it's fun. But Ron says I don't play the saxophone. In fact, I barely play the iPod.
No, that is funny. That is funny. I love it. Well, Ed, thank you so much for being a guest on. But one final question that I love asking every guest that comes on is, when you think about, the lessons you've learned in your journey, and, what's 2 lessons that you've learned that you think other accounting and finance firm owners should know? And it could be something you've already said that you want to reiterate, or it could be 2 new things.
I'm going to reiterate because I think they're so important, and that is that because it is the number one myth in business. Business is not a zero-sum game. It's a positive-sum game where wealth is created on both sides of the transaction. And then the second one is, if I could send every professional, accountants, lawyer, to the Bart Simpson whiteboard or not whiteboard, was the chalkboard of life, I would have them write over and over and over again: price does not come from cost. Price does not come from cost.
Awesome. I love it. Well, Ed, thank you so much for being a guest on. And before we go, can you repeat that website one more time so people who are looking for it can find you guys online?
Sure. Thesoulofenterprise.com, soul, SOUL, because we believe business has a spiritual, if not necessarily religious component. Soul of Enterprise.
Awesome. Well, thanks for coming on.
Thank you for tuning in to another episode of the Finance and Accounting Show. If you like what you heard, don't be selfish. Make sure you hit that subscribe button and then share this with a friend, because you know a business owner that could definitely use this insight. So be sure to hit that subscribe button, share it with a friend, and turn on the notification bell so you get all the updates when we release a new episode.